as we prepare for tax day, which is just exactly 1 month from today. Our financial contributor, Ray Martin, joining us this morning with some great tips on how to get organized, because for some people a month away, it's like, whoa, I got an eternity, plenty of time.
Yeah,
Guilty.
well, hey, you know, it's time to get on it, though.
It is time to get on it.
Yeah.
So in terms of getting organized, you say that the first place we need to start, not necessarily with this year's W-2s, look at your 2008 return. Why is that so important?
Well, your tax preparer is going to ask for your last year's tax return if they don't already have it, so you should look at it too. You want to look at that for a couple of things. You want to know what areas of income and expenses you'll need to report. You also want to look for carried over items like tax refunds that were applied to your 2009 tax payments, excess losses on investments, and you'll want to make sure personal information like address and dependent information is accurate too, particularly if you're using a new tax preparer. Review that prior to your tax return. Okay,
so that'll help you with your checklist as you get organized. In terms of organization too, you say make sure you have the receipts organized, because presenting the shoebox doesn't go over very well.
Do not be a shoebox client. That's what they call them in the industry, and the tax preparers here. Instead, you want to organize, categorize, and summarize your receipts. Organize by earned income, investment income, and deductions that you're going to have. Then categorize those deductions by home office, rental, charitable, mortgage interest, property taxes, and then summarize those. You only need to give your tax preparer your W-2s and your 1099s. Don't give them all those other receipts. They don't need them.
So if you don't give them all the receipts, what do? Just give them a list of what you're claiming?
Organize, categorize, and then summarize each category of expenses and give them the summaries of that, not the actual receipts. You just don't need to give them all that detail and make them rummage through. If you give them the shoebox, they're going to charge you more as a secretarial service just to put it all together.
And we don't want that. We
Organized
want to save
clients
money.
pay less. That's right.
But do hold on to them in case you get audited, correct?
Of course.
Hold on to those
Yes.
receipts. Also, you say gather the cost of any investments that you have sold. Are you talking just about stocks, or give me some more specifics here? What do you mean investments sold?
Stocks, mutual funds, bonds, whatever. Investments that you sold in a taxable account. We're not talking about IRAs and 401ks. We're talking about taxable accounts. You need what will be reported to the IRS is the proceeds of the sale of investments, shares of mutual funds or stocks. You then need to get the cost information, what you paid plus reinvested dividends here. Sometimes it's not on the 1099 that you give to your tax preparer, so you got to call the financial firm and get it yourself. If you don't get it, and your tax preparer has to rummage this, they're going to, again, charge you more for their time to get this information. You can get it from the financial firm where you bought the investment.
Okay, we can do that quickly. Also, you say any large purchases you may have made this year, make sure you have documentation. This is cars, homes.
Bought a vehicle, bought a home, refinanced a mortgage, made energy-saving home improvements to your home. Give them the sales and purchase receipt for the vehicle, the settlement statement for the home or the mortgage you refinanced, or the cost and what you paid for home improvements. There's deductions and tax credits there that you can qualify for. Make sure you tell them.
Ray Martin, always helping us out. Good to see you this morning.
You're welcome.
With your tie all set for St. Patrick's Day later this week.
And
for more tax prep advice, log on to CBSMoneyWatch.com.